Good Sunday morning, traders. This is Sam, the Trader Geek, with your Sunday, November 30th, 2025 market review and preview for the coming week. Hope you're having a great Thanksgiving weekend. And since it's a month end, we're going to take a look at some of the markets and sectors and industries for the month, see how we did. And we're starting out with Friday's action, which was, of course, a holiday shortened day. And gold recovering its winning ways, up 1.25, leading the way on Friday. And Bitcoin bouncing 0.9%, as well as the technology laden Qs up 81 basis points. Mag 7 gaining 0.68, and the VIX losing about 5%, and the TLT, the 20-year bonds, losing 0.5%. But overall, pretty positive day and pretty positive end to the week. And they did goose it up at the last minute. You could tell, just to make sure the SPX closed positive for the month, but we'll get into that in a second. For the week, Bitcoin was the leader, recovering 7%, as were the microcaps, up 6.23%, and IWM up 5.5%. Those small caps really bouncing nicely. Mag 7 up 5.2, and the Qs up almost 5%. Mid caps up about 4%. So total stock market index up 3.86%. SPY getting up 3.7. So overall, a pretty good week, pretty good holiday week, keeping and consistent with the seasonal tendencies. You can see gold was up 3.65, and what really lost altitude, of course, was the VIX, with everything else going up, and the dollar losing about 0.6%. So that might have a little bit to do with the strength in equities. Aggregate bonds up 38 basis points, and high yield bonds up 77 basis points. So everything positive on the week except the dollar and the VIX, which is what the bulls really like. Taking a look at the month of October, since that's now over from a trading perspective, gold was up 5%, mid caps up 2%. And at the bottom of the list was Bitcoin losing about 17.5%, and the VIX losing about 6%, although you couldn't tell the range that we had in the VIX by just looking at what it lost during the month, because it was up there over 28 at one point. Mag 7 lost ground during the month, 1.77%, and the Qs also did not quite close positive. And you could see the SPY just barely eked out a gain for the month. And like I said, that was a last minute, I dare say, call it a manipulation, and so that they wouldn't flip the candle red for the month. In any case, I guess they didn't care as much about the Qs. They were a little bit had a lot more work to do. So VTI up 0.25% on the month. Quarter to date, we're out. We are 2/3 through the fourth quarter of 2025, and we have just one lowly month left, December, starting tomorrow. And gold is by far the leader this year, up 9.1%. Microcaps up 5.5%, and the Qs up 3% this quarter. So Mag 7 up 3%, and the Dow also no slouch at 2.9%. At the bottom, Bitcoin so far this quarter is down 21%. We'll see if December is kinder to the cryptocurrencies than it has been so far this quarter. High yield bonds down 0.25%, and the VIX basically flat on the month, as were the aggregate bonds. Mid caps just eking out about a 1.5% gain. And then finally, taking a look at major markets for year-to-date basis, nothing even comes close to how gold has done, up 60%. Mag 7 still showing their strength year-to-date, 22, almost 23%. In line with the Qs, up 21%, and the microcaps up 20.69%. Even leading the SPY, which is up 16.6%, in the total market index. At the bottom, VIX, again, looking at this, you would never know the spikes in the VIX, but we're only down less than 6% on the VIX. The dollar's down 4%, And Bitcoin on a year-to-date basis wasn't this way until this quarter, down 4%, and high yield bonds up 3%. Taking a look at the sectors on Friday, everything was positive except the retailer stocks, which is kind of unusual given that it was Black Friday and we were getting pretty good reports out of the retailers. Uh, Healthcare taking a little bit of breather, well deserved. What a run that's been in the healthcare stocks and the biotech stocks, down 0.5%. Metals and mining pairing up with gold up 1.84%. Energy doing pretty well, up 1.3%. Telecommunications up 1%. Taking a look at the sectors on a weekly basis, everything in the green, some more than others, but metals and mining almost 10%. And then the retailer stocks, I guess this kind of explains the lackluster performance on Black Friday for the XRT, still up 5.5% on the week. And the consumer discretionary up 4.86, technology up 4.77, and we have the transports itching to break out, about up 4.2%. Materials also recovering nicely, up 3.5%. Sure, a real dismal third quarter, or I should say fourth quarter. So starting to recover. The bottom at the bottom rung, we have the energy down up 1.15% and real estate up 1.88%. So kind of you have the defensive complex down here. Some people might not call real estate defensive, but real estate investment trusts are really mostly bought for income than anything else. So the bottom four being the defensive sectors. On a monthly basis for the month of November, XLV is the leader. Like I said, healthcare, nothing even comes close. Materials up 4%, retailer stocks 4.1, and the XLP being the staples, finally showing some relative strength, although just on par with everything else except healthcare. XLE picking up some ground, 2.63%. Worst sector in November, surprise, surprise, is technology, down 4.81%, with discretionary down, and that's kind of post Amazon and some Tesla hangover here, 1.45%. Industrials doing nothing this month, and telecommunication stops as well, kind of flat. Taking a look at what we were looking at, we need the quarterly. Yeah, so here we've got the quarter to date. Look at the healthcare, 13.28%. Nothing else is double digits up or down. Metals and mining, 4%. Utilities up 4%. At the bottom, communications down 2.5%. And we have XRT, the retailer stocks, despite the strength over the last month, still down 2.2%. For the year-to-date basis, metals and mining, clear winner, just like gold is in terms of sectors. XLK up 23%. That's technology, and telecommunications stocks up 22%. No slouch, the utilities, which is also considered a defensive sector, although with the uranium plays and the nuclear plays, it's been goosing utilities. So we're up 20% year to date, which is not bad. XLC, despite the weakness in Disney and in Meta, is up 19% year to date, given that Google has kind of been pulling the weight of the Mag 7 for the past month or so. Industrials up 16.64%. And again, the healthcare, kind of middle of the road for the year. Finally, XLP, the consumer staples, pulls up 0.97%. out of the red from last week, and we can see that real estate and consumer discretionary and energy kind of pull up the rear in terms of sectors. Looking at industries real quick, you can see that on Friday, blockchain stocks followed Bitcoin up. We had some solar stocks up 2.11%, GDX with the metals and mining up 2%, and everything kind of in the green on Friday. Everybody was celebrating Halloween, Thanksgiving. Even ITB home builders were up just a fraction. If we take a look at for the week, GDX up 13%, recovering a lot of the correction losses. Blockchain stocks up 12.68%. Semiconductors up 8%. At the bottom, finally getting a little bounce in the cannabis stocks as well as cyber stocks. KWeb recovering 3.04%, and XOP, exploration and production, up 3%. On a monthly basis, mixed bag for most of the major industries. GDX up 15.5%, and we know that biotechs were up 9%, and we've got exploration and production up 5%, with ITB home builders up 3.4%. Worst of them, we can see here now for the month of November, losing 22.5%. Those are the pot stocks, back to their losing ways. Blockchain stocks losing about 9.63%, and software surprisingly weak given the strength in technology. KWeb, this is Chinese tech stocks, giving back a bit. They may be ready to get going. ITA being the transport stocks down 5%, and internet stocks down 5%. So not so kind. In the quarterly basis, again, another mixed bag, 2/3 through the fourth quarter, and the best of them being biotech at 22.9%, TAN being solar up 12%. Worst of them, of course, the pot stocks, and KWeb losing 10.5%. Funny how fast this thing seems to go up and head right back down on the Chinese stocks. Blockchain stocks down 6.65%. Year to date, picture looks a lot greener. GDX, none of them even come close to the 145% in the GDX. We started the year at $34, and we're at 83, so better than, it's almost 2.5 times. So if you've been in metals and mining stocks, you've done great this year. TAN, solar stocks up 47, semiconductors 45%. Blockchain stocks, despite the quarterly weakness, still up almost 45%. And ITA being the transport stocks. No, I'm sorry, ITA is aerospace and defense. I misquoted and said ITA being transports. No, these are not the defensive, but the defense stocks. XBI up 36.75. KWeb still up a strong 28%. And what's the lowly negative ones? We got pot stocks down 8.66, and then software. This includes the likes of Snow and CRM and Adobe. Not so strong this year, just kind of barely under flat for the year. Magnificent Seven, you can see here for the week, only NVIDIA losing ground, which is kind of unusual, down 1.05%, but the rest of them gaining ground, with Tesla being the best, with Meta finally bouncing about 9%, and Google up 6.83%. Quarterly basis, you can see that Google far and away the leader, 31.44%. Apple in second place. Amazon, the third out of 7 to be green, with Meta so far the worst this quarter, 11.77. We still have a month to go. NVIDIA down 5%, and Microsoft down 5%. Year-to-date basis, nice to see them all in the green, with Google, no one even coming close. We used to say that about Nvidia, and now they're only up 31.8%. And I say only, kind of tongue in cheek. Microsoft up 16%. The worst performer only up 6%. 6.3%, Tesla up 6.52%. And when you consider that the S&P 500 is up 16.6% on the year, you can see that there's only really three of them that are outperforming the S&P 500. And you have to wonder what happens if, some of the most heavily weighted stocks like Google and Nvidia and Microsoft start faltering, what happens to the index. But in any case, only 3 out of the 7 are outperforming the S&P 500 itself. So that's kind of interesting. All right, so let's take a look at what I always like to do every week is go through the major indices and the charts, the daily here, weekly in the middle, and the monthly over here on the right. So let's start from the smaller time frame down up to the bigger ones. I probably should start going the other way, but here we are. We could see that that bounce that started last Friday on the 21st of November continued, and we've had 5 up days in a row. We flipped the parabolic stop and reversed the volatility stop green, and we're parked right at the edge of the bearish chandelier. That is another volatility stop, which tells me if we take that out, then we'll probably head for new all-time highs and then some. MACD flipping up with the fast line over the signal line, so that's a positive. So, and we're still right around the zero level. We can see here that, all right, maybe you can't see it, but in gray here, right, this line here where my cursor is, was where the options implied expected move. And I put out a note that this is where kind of the line in the sand, and market didn't care. It kept going. So we closed outside of the options implied expected move. And, given that it's based on a 1 standard deviation move, you would expect that about 32% of the time we are going to close outside the expected move, which is what we did last week. And here was the lower edge of the expected move. We never even came close. I mean, the closest we came was 65.23, and this is all the way down at 64.58. So we did beat the options implied expected move, which was 144 points, 142 points, I think it was, for last week. And the new expected move, we'll double check on this, is about, I want to say 83, 84 points. So we could head up to 69.31, or we could head back to 67, 64, or anywhere in between, but looking really strong. Weekly, can't be the candle that looks like this, can you? After the bottoming tail, or I should not bottoming tail, but after kind of a doji here, nice solid candle. I wouldn't call it a Marabuzo candle, maybe it is. In any case, we took back this candle, and we're now in the week of the 10th candle. So again, looking strong. MACD flip negative, but looks like it wants to flip back positive. So let's call it sideways for now. Relative strength is at the 65 level. And so plenty of room to move back up to the overbought level as 70. Looking at the monthly chart, you can see that, bottoming tail. Is it a hammer? Who knows? But in any case, we were not in a downtrend, so you can't call this a bottoming hammer. It's just that a long wick here, and we avoided closing in the red. We would have if we had closed under 68.40, then that would have been a red month for the SPX. But although we have a red candle here, it doesn't mean that it was down, because we closed up 9 points. But we did traverse it, and we did take out the 65.50 low of October, and we actually got down to 65, call it 22, and before bouncing. So nice recovery, a nice manipulation at the last minute of the market, but that's what you get with month-end window dressing. MACD or the RSI still sizzling hot at 75, has not taken a breather. MACD is still positive. Taking a look at the NDX, same sort of look, 5 up days in a row. PSAR is bullish, bearish chandelier. Here's the chandelier stop. If we can close above the 25,576, we'll be in good shape. MACD flipping back over very quickly. I mean, we keep seeing these V-shaped recoveries, and everybody's still in disbelief. And must admit that I am too. I mean, this did not feel good at all for anyone, especially if you were holding high beta stocks. And here we are on the weekly. MACD is negative, but looks like it wants to flip back up. RSI at the 62 level, not at the overbought level. And yeah, I mean, we took out last week's high. We closed above last week's high. That's always a positive sign. We still have a bearish PSAR, but the chandelier did not flip negative last week. And there's your chandelier stop. And your PSAR is right up here, 25,867. We did a weekly close above that to clear that out. Here's the monthly candle, a long bottoming tail, and then we closed just slightly below last month's close. Last month's close being 25,858. So a few hundred points under, but MACD is solidly positive. We're still heavily overbought on the MACD, on the RSI, I should say. Last one here, the RUT, really showing strength, and you could see on Friday the candle looks better than both the NDX and the SPX, and solid rally up, up 0.6% on Friday. Chandelier's positive, PSAR is positive, MACD more progress than the other two indices, and we're at 59 RSI. Looking at the weekly, we're trying to take out this PSAR dot right here at 2509. As long as we get a weekly close above that, then we should be double greens here on the chandelier and the PSAR. MACD wants to flip back positive. Here's your green candle, which means that we closed the month higher than where we started. Last month's close was 24.79, and we closed a solid 21 points above it this month. So we did a bit of one-time framing cessation here. We took out 2 months candle, and then we bounced really nicely. MACD is solidly positive, and we're still not overbought here on our, yeah, we're still not overbought the 70 level on the RSI. Taking a look at the VIX, well, this is definitely not looking good for the bears. Chandelier's red, so is a PSAR. And you can see here, this time around, we peaked right around 28, 27. We're already down to 16. Amazing how fast volatility loses altitude here on a weekly. We took out 1, 2, 3, and we're back into 4 weeks ago. And then you can see the monthly. We keep trying to cut through it, but we don't. Also like to look at the VVIX, and when we talked last week, here we closed last week at 118.34, so there was a big caution sign, and now we're back below the warning track, which is 100, and that's a good thing for the bulls, and who cares about the monthly. But let's take a look at where after this 5-day rally and us really getting overbought. Let's see where the VIX option prices are. Our next monthly expiration is in 16 days, the 17th of December. And we can see here that, let me switch to something with no indicator. So we can see that the VIX closed at 1635. Let's call it 1650. And if we go out $1, they're priced at, can't do math this early in the morning, $1.52. And if we go out to, say, the 15 and a halves, that's going to be about 12 cents. So looks to me like the calls are pricing out about 10 times the puts, which indicates to me we're due for a pullback here. The bears have the definite advantage on this, but this is only one data point. But if you're going to pay $1.42 for calls and just about 12 cents for the puts, so we're roughly about 10 times. So this is not an insignificant difference, although we saw with the VVIX down at 90 and what has happened. So could we rally further? Yeah, but I do think that this is giving an indication that we're probably going to see some type of pullback. Our next monthly expiration is here in January. That's 51 days away. And again, 1750, they're pricing at $3.15. And these are pricing at 20 cents. So yeah, definitely the options pricing on the VIX is showing a need for and an indication that we may get a pullback here in the next few days, given that we are overbought and we have traveled very quickly. We've covered a lot of ground quickly to the upside. Looking at the SPX, just confirming our expected move. Yeah, it's around 83 points for this week, give or take. Again, with the volatility that we're seeing and 100-point swings, I'm a buyer of short-term options, not a seller in general. And you can see here, the market is definitely positive. All indications, everybody's looking for swag, breadth thrust, and all other things, and it's going to be smooth sailing into month end. I'd be cautious about that a little bit. Given how much energy we expended getting up here, I think we're due for a breather. We should take a breath before we try to attack those all-time highs. I would still be keeping a tight leash on trades, and if you're in options, giving them no more than 25 to 50% in terms of time. So again, I think that all-time highs are definitely in the cards, but I think in the short term we are overbought, and there's a need to be prudent about putting on more risk after we've traveled quite a bit here, and basically from 65.21 all the way to 68.49. So that's well over 400 S&P points in a matter of 5 days. So take it for what it's worth. I'm Trader Geek Sam. Thanks for listening. Hope you have a good rest of your Thanksgiving weekend, and I will see you back here next week. Follow me on Twitter at Trader Geek. Otherwise, enjoy the rest of your weekend. Talk to you soon. Bye-bye.